They called him the Wall Street Wolverine, a man who didn't just invest, he went to war. Bill Ackman built his empire on bold bets and bigger risks, but one move nearly destroyed him. In 2012, he waged $1 billion crusade against Herbalife and lost, publicly, painfully. But instead of disappearing, he came back sharper, richer, and more dangerous than ever. This isn't just a story of money, it's a lesson in ego, failure, and redemption. Welcome to the rise, fall, and comeback of one of the most controversial billionaires alive. The making of a market maverick. Bill Ackman was born in 1966 in Chappaqua, New York, into a well-off family. His father owned a real estate firm, which gave young Bill an early peek into the world of finance and investing. But Ackman wasn't satisfied just managing property. He wanted to manage power. He attended Harvard College, where he earned a degree in social studies and later went on to get an MBA from Harvard Business School. And it was there, deep in the academic trenches of case studies and market theories, that he developed a hunger not just for wealth, but for transformation. In 1992, he co-founded Gotham Partners, a small investment firm that gained attention for its bold, contrarian plays. Ackman had a style. He didn't just invest in companies, he fought them. He challenged CEOs, dissected financial reports like an autopsy, and used the media as a megaphone. But Gotham didn't last. It collapsed under the weight of its own complexity, leading to legal fights and investor exits. Most men would have stopped there. Bill didn't. He reloaded. By 2004, he launched Pershing Square Capital Management with just $54 million under management. This time, he promised to be smarter. He would find undervalued companies, push them to improve, and make a fortune in the process. But this was more than investing. It was activism, and it would make him both famous and infamous. Billion-dollar battles. What sets Ackman apart from most investors is his willingness to go to war. And one of his first major campaigns was Target. Yes, the retail giant. In 2009, Ackman tried to get multiple board seats, believing the company needed better real estate strategy. Despite owning nearly 10% of the company's shares, he failed. It was a rare early loss, but he wasn't done. Enter Canadian Pacific Railway. This was his redemption arc. In 2011, he waged an aggressive campaign to overhaul management, bringing in legendary rail operator Hunter Harrison. It worked. CP's stock skyrocketed, investors rejoiced. Ackman looked like a genius again. Then came J.C. Penney, a massive failure. He pushed for a modernizing CEO, Ron Johnson, who ended up alienating the company's loyal customers. The result? A corporate disaster. Bill took the loss, but kept moving. But nothing, and I mean nothing, compares to his most legendary and controversial battle, Herbalife. In 2012, Ackman shorted Herbalife, a nutrition and supplements company, calling it a pyramid scheme and betting $1 billion on its collapse. He didn't just make a financial bet, he launched a public crusade. Press conferences, documentaries, investigations, it was pure financial theater. But Herbalife didn't fold. Instead, rival billionaire Carl Icahn stepped in and took the opposite bet, buying up Herbalife stock and going to war with Ackman in one of the most vicious Wall Street rivalries of all time. The two traded public insults on CNBC. Ackman looked rattled. The market smelled blood. By 2018, Ackman closed his short position at a staggering loss rumored to be near $1 billion. Combined with other missteps, its estimated Pershing Square hemorrhaged over $4 billion in that era. The activist god had fallen. The dark years. Between 2015 and 2018, Ackman was bleeding, not just financially, but reputationally. The media labeled him a failed prophet. Investors pulled money from his fund. Critics mocked his ego. Some said it was the end of his career. And maybe they were right, if he'd been anyone else. But Bill Ackman isn't like anyone else. He vanished from the spotlight. He stopped doing television interviews. He moved out of the day-to-day spotlight and did something he hadn't done in years. He reflected. Internally, he began reassessing his approach. Less theatrics, less ego, more precision, fewer public vendettas. And slowly, the man who once lost $4 billion began rebuilding his empire. Ackman doubled down on fundamentals, took quieter positions, and cleaned up Pershing Square's portfolio. He also bet on restaurant chains like Chipotle, post-food poisoning scandal, and helped the stock recover with proper management changes. The result? Massive returns. His turnaround wasn't flashy, but it was effective. In 2008, his fund was up 58%. In 2020, it surged again. This time, thanks to a genius hedge against COVID-related market crashes, netting him $2.6 billion in profit in just a few weeks. The man Wall Street mocked was back, and now he was even more dangerous because he'd learned the hardest lesson of all. The market doesn't care how loud you are. It cares how right you are. The psychology of a billionaire. What drives a man like Bill Ackman? Power, legacy, or maybe redemption? At his core, Ackman isn't just a businessman. He's a reformer. He genuinely believes that capitalism can be ethical, that shareholders have the right to force change, and that companies should be accountable. But that idealism is often clouded by ego, which has led him into high-stakes traps. Ackman is famously obsessed with detail. He reads financials like scripture. He prepares speeches like a presidential candidate. He treats board meetings like battlefields. But perhaps his greatest weapon and weakness is conviction. Once he believes he's right, he goes all in. That's how you make billions. That's also how you lose them. He once said, "I've never had a good investment that didn't look bad first." That line sums him up. He thrives in chaos. He bets on the outliers. He's comfortable being hated because in his mind, being misunderstood is the price of being early. But the Herbalife loss haunted him. It was the moment when conviction turned into obsession, and it nearly ruined him. Today, Ackman is older, more cautious, and, ironically, more influential than ever. He's launched his own SPAC, Special Purpose Acquisition Company, considered one of the most disciplined in the market. He's active in philanthropy, and he's even been floated as a future Treasury Secretary by some political circles. The price of playing God. Bill Ackman tried to rewrite the rules of investing. He didn't just want to profit, he wanted to control the narrative, to fix what was broken, to punish the corrupt, and reward the efficient. He saw himself as a kind of benevolent capitalist, but that kind of power comes at a price. The market punished him for his hubris. It humiliated him for his theatrics, but it also taught him a lesson no Ivy League school could teach. You can be smart, right, and still lose, because markets don't follow morality, they follow momentum. The $4 billion loss wasn't just about numbers, it was about being humbled, about facing the limits of one man's influence and realizing that even gods bleed. And that might be the best thing that ever happened to him, because out of that chaos came a more disciplined, more dangerous version of Bill Ackman, one who now plays the game not with arrogance, but with calculation. His story is a parable for every entrepreneur, investor, or dreamer who thinks confidence alone guarantees success. It doesn't. Winning means failing, hard, losing money, getting mocked, staring down $1 billion mistake, and still showing up the next day. That's what it takes. That's the price. So what do you think? Was Bill Ackman a reformer or a reckless gambler? A misunderstood visionary? Or just another Wall Street ego with too much money to burn? Let us know in the comments. We read everyone. And if you want more cinematic breakdowns of controversial billionaires, market legends, and the wild stories that define the economy we live in, subscribe now and turn on notifications. The next story might just blow your mind.